Hey folks, this is John Miller, Executive Editor with WV News. We would like to welcome you to Ask the Experts, featuring John Halderman of Beacon Wealth Management. John is the founder, owner, and certified wealth strategist at Beacon Wealth Management. You can find out more at bwmwv.com. And now live from the studios of the Exponent Telegram in Clarksburg, West Virginia, let's Ask the Expert. Welcome to Ask the Expert with John Halderman of Beacon Wealth Management. John, we're going to talk about that topic that nobody wants to talk. Well, they may want to talk about it, but nobody wants to pay, and that's taxes. What about tax strategy?
You know what? It's funny, John. There hasn't been a single person who ever walked into my office and said, "Hey, man, is there any way you can help me pay more taxes?" That's one thing I never get a question on. So you're exactly right. Nobody wants to pay unnecessary taxes. And you know, there's a lot of things. What I always tell people is people go every year and they file their taxes. And I tell people that to me is silly. You know, there's a huge difference between tax filing and tax planning. And what tax strategy is all about tax planning, because people make crazy assumptions. And to give you a simple example, let's say you're a business owner, okay? The government has changed so many laws in the last several years, especially during the COVID time period. And one of the most simple things they gave was what they call employee retention credits. And what employee retention credits, you know, you hear these on commercials, but one of the biggest confusion is that people said, well, my accountant told me I didn't qualify. And I'll say, well, wait a minute. What made you not qualify? And they'll say, well, because I made money. And I'll say, you know what? Did you submit to the IRS? They said, no, I just didn't do it. And I said, why not? I said, here's what I know. The rule stated this, that if you were impacted by COVID, which I don't know what business wasn't, because whether you lost money, whether you had employees that did not work, supply chains, any of those things, you had some form of impact. And so what the IRS said was this: hey, look, submit a tax return or submit a return for this. We'll calculate it, and then they will determine whether you get this or not. And so what I tell people is, I worked with our tax planning people. Okay, when I say ours, I work with groups of tax planning people, and we help people submit those things. And what we found is every single person that we did this for got money back. And so what I always tell people is, if you're not sure or your accountant's not sure, don't just say no. You know, take that, submit it. Let the IRS determine, because you wouldn't believe how much money we were able to get back for people. I mean, it was significant amounts. It was so big that some people felt like they'd won a mini lottery from that amount of money. And so that's what tax planning does, is it takes it into account all potential things like that are going to reduce your taxes, not just file your taxes and pay what is believed you owe.
Now, we've talked in the past about estate planning and legacy and the potential of leaving a huge tax burden if you don't plan taxation. Explain that a little bit.
Okay, so let's say you build up an IRA. And again, you know, my clients, whether you had a $2 million IRA, whether you had a $20 million IRA, okay? What happens if that's on a pre-tax basis? So that means nobody has ever paid that tax. And what people don't realize is this: here you have this big account, and all of a sudden you pass away and your kids are going to inherit it. Well, they have to inherit that money as a distribution. They have 10 years to take that. Well, some kids don't know any better. They may take it in a lump sum. So it sounds great, you know, hey, I'm getting this $1 million, let's say, from my family. But that $1 million is taxed as if you earn $1 million that year. So if you earned $1 million that year, you owe close to 40% in taxes. But guess what? If you work, it adds to your working income. So let's say you work somewhere and maybe normally you're in a 20% tax bracket. Well, not only is the inheritance money taxed at a higher rate, your normal income now is going to be taxed at a higher rate. So just receiving an inheritance straight in a tax qualified plan, if you don't know what you're doing, you may create a big tax bomb.
And when that becomes, so let's say I have something and then I pass it on to my kids, it's taxed at their current rate, not my retirement rate.
That is correct. So it's taxed as ordinary income. So if you inherit a $1 million IRA and you decide, hey, I'm just going to take this money out because you just don't know any better. Okay, you take this money out, the IRS says you just earned $1 million this year. They don't care, because to them, the more you earn, the more they get. You know, and you just don't think about it because you're thinking, wait a minute, I didn't have this money before. But you don't realize it impacted your inherited IRA plus your ordinary income. So it's both of them combined it has an impact on. And so I tell people that's a big, big thing.
So what should people be thinking when you talk about planning taxation or
Everything is always think about outcome, the outcome you desire. Let me give you an example. So I had a couple who both were medical practitioners, okay? Very, very successful. They have one child. And so they said to me, hey, look, John, what we want to be able to do is we want to be able to pass everything we have onto this child as quickly and the least amount of taxes. Well, they had multiple millions of dollars. So my goal became what they wanted to accomplish, and that is, how do I take these multiple millions of dollars, pass them on to my children, and minimizing that tax impact. So outcome is the biggest thing you got to be thinking about, is because I always tell people, don't get ahead of yourself. Don't try to think about the answers. Always think about what you want to accomplish. Then I will take a look at what you've done and figure out, okay, what are the gaps that we need to address? Because there could be, like I've just described, that's a train wreck to me. And there could be opportunities because you're not an expert. And so because you're not an expert, you don't do this every day, there's going to be lots of things that you weren't even aware of. And so that's where we come in, is we put together the strategy to help you try to achieve whatever it is that's important to you.
And again, that's why we call the show Ask the Expert, because John Halderman of Beacon Wealth Management and his team over there just provides a wealth of knowledge. So, parting shot, what's the key? One
of the keys I tell people is this. Don't get overwhelmed because sometimes people will say to me, hey, look, you do wealth management. Is that for the super wealthy? 25 million. I tell people all the time, you've worked hard all your life. You've saved this money. And the one thing I know is you don't want it to go to waste at the end of your life because of taxes or because of things you just don't know. And so what I tell people is, if you've got concerns, whatever it is, think about that outcome. And if you're not sure that you're going to get that outcome, then we need to talk. Because I'll use a simple example here in West Virginia. A lot of people own farms. And when they own farms, they're thinking, okay, how do I protect this farm from having to be taken from me from a nursing home? So, a lot of times people think, well, I'll just give it away. I'll give it to my children. The problem, though, is when you do that, you lose what we call stepped up in basis. And that's a big, big tax benefit. And so sometimes by just making a decision that you think is nonchalant, that's going to help you, could end up hurting you. And so what I tell people is, if you had some heart problems, you'd never get a scalpel out and start cutting on your heart. It'd be crazy, right? So don't just make unnecessary, irrational decisions. Come talk to somebody like myself, because that discussion could make a huge difference potentially in how the results end up for your family. But we won't know unless we actually have that discussion.
Well, we want to thank John Halderman of Beacon Wealth Management once again joining us on Ask the Expert. We'll be back next time. Ask the Experts, featuring John Halderman of Beacon Wealth Management. John is the founder, owner, and certified wealth strategist at Beacon Wealth Management. You can find out more at bwmwv.com.